All right, everybody. I promise you a big name. Here it is, Ron Insana, formerly CNBC, MS now veteran, producer, anchor. Ron Insana, welcome to the show, man. How are you?
Thanks, Stephen. I'm great. Thanks for having me on. Appreciate it.
I love this. Look, Ron, one of the things I've always said about the world of finance and fintech is that so hard for people to see it one-sided. They know you like they know you because you're in their living room all the time, but they also don't get to have questions and answers of you. So I want people to get to know you as a person. You're a real guy. You're a cool guy, man. I love it, man.
I'm a guy. Yeah, I don't know how cool I am, but just ask my kid about that.
I love this. And what's interesting is, Ron, you have a very storied career, and I want to get right into that. So I'm going to go away a little bit. I'm going to ask you, Ron, tell us a little bit about how you got started, where you're from, and the whole wall of worry you climbed there.
Yeah, well, growing up in Buffalo, it's an easy wall to climb. That first 13 years of my life were in Buffalo, New York, and my folks decided when it was deindustrializing that they would follow my dad's family out to Los Angeles. And so from there, kind of went to a state college, but I went to a Catholic high school where I met Casey Wyan, who ultimately ended up being a financial journalist. And there's a movie called The Accidental Tourist. I'm the accidental journalist. I was a film major in college, could not find work when I graduated. I called my friend Casey, who I'd gone to high school with. He was working at the fledgling Financial News Network at the time in 1984. And got me an entry-level position. And it's been a 41-year journey that has included 7 years at FNN, 34 years associated with CNBC, running a hedge fund of funds for a period of time from 2006 to 2008, briefly working for Steve Cohen at SAC back in the day, and then doing a lot of speaking, a lot of contributing to places like CNBC, MS, and a host of other places. And all the while, keeping myself entertained, following the Buffalo Bills and playing my drums in the garage, things like that. So yeah, there is a complete person behind the screen, but more often than not, people, see and hear my comments on markets and the economy.
Now, are you still a Buffalo Bills fan?
Long suffering. I mean, the first time I remember following the Bills was somewhere in 1966, 67. So I was 5 or 6 years old and haven't given up yet.
I mean, I've been a Washington football fan for as long as I can remember, and it has been long suffering. All right, so you
beat us once. So
okay, well, that luck comes around once, twice on a calendar or a clock, right? Okay, let's get to it. Ron, finance. Why finance? Why do you enter the world of finance? And you're a stalwart on Wall Street.
Honestly, there was no plan. It wasn't done that way, Steve. I got this job, this entry-level position at Financial News Network, and I knew nothing about money. I'd never taken an economics class. All I knew about money was that my family didn't have a lot, and I wanted to make more in order to right some wrongs, if you will, that I experienced growing up. But the more I got involved at Financial News Network, and the more this conversation was taking place around me with people like Bill Griffith and Sue Herrera, Liba Geft, Ed Hart, who was our original credit market reporter, John Bollinger, whose name I'm sure you're familiar with, Doug Crichton, Michael Crichton's younger brother, was our senior producer. All these people were having this conversation that was literally beyond me. And so the more I got into it, the more I threw myself into it and started reading Wall Street journals from the 1920s. I started teaching myself. Doug gave me just a load of books to read about economics and markets. And I found it fascinating. And it was a conversation I wanted to be involved in. And so when I got on the air in May or the spring and summer of 1985, I was on there not knowing what I was doing as an anchor and not knowing what I was talking about as a financial journalist. And so it was a sink or swim type thing. I really found it compelling. I found it interesting. It was three-dimensional chess every day. And it just went from there. I just really found that I love the conversation, and I most certainly love being part of it.
Yeah, and what's interesting, Ron, is you have an amazing following. People know you're in their hearts because you've been in the living rooms for so long, especially during the day when they, were following markets. You have some very special moments in your time, and some times that really stick out at you. And when I saw you on the floor the other day, you actually mentioned one of those, and that was being during 9/11 as well. And sometimes, give us some good times and some bad times that you've had being an anchor there at CNBC and MS now.
They're mostly great. I mean, 9/11, of course, is unique and surreal as an experience. when you're a journalist and you end up inadvertently becoming a participant in a major world event, it's unusual at best, to say the least, and jarring, and left, for a period of years, obviously a few emotional scars. But more often than not, it was great stuff. I mean, I got a phone call in July of 1999 asking if I wanted to interview President Clinton about the economy. And the gentleman who was working at the White House at the time who handled that stuff had been a former CNBC producer. And it came down to me and Neil Cavuto as to who would get the interview. And I ended up getting it and traveling to Clarksdale, Mississippi to sit down to do my first presidential interview. And I had many more after that with Clinton and then ultimately with George W. Bush as well. And those are just kind of mind-blowing experiences because they're so different. There's so high intensity that you really have to be on your game. And then I've had fun ones with, folks like Warren Buffett. I've played Madden football with Bill Gates on TV. I interviewed Steve Jobs, Bono, and The Edge when they introduced the U2 iPhone or iPod, I should say, back in the day. Old story about Warren Buffett. There was a period, early CNBC days, we were talking about Berkshire Hathaway's earnings. And Joe Kernan and I were doing this segment called Stocks to Watch. And so we were talking about our favorite Berkshire companies. And having moved from LA to New Jersey when FNN and CNBC merged, one of my favorite candy companies was See's Candy, which was only available on the West Coast. So that was my favorite. Joe's was NetJets. So we mentioned that on the air. The next day I get to my desk and there are these two huge boxes sitting there. And I open them up and there's 10 pounds of See's Candy and a note that says, "Thanks for the mention, Warren." So I call up Warren Buffett, to thank him. He takes the call. I had no idea that he watched CNBC or any of his people did. And he said, "Are you going to share that with the office?" I said, "Absolutely not." I said, "I can't get it in New Jersey. I'll leave a pound here. I'm taking 9 pounds home." And he said, "Tell Kernan he's not getting a jet." So there were these moments that were just totally, serendipitous. And then there were, a host of names of people that, you'd recognize that I got the chance to talk to. And most of it was fun. Going to Davos was fun. Going to the White House was fun. All those things that we kind of really aimed to do, getting to meet hedge fund managers from George Soros to Julian Robertson to Steve Cohen, all that type of stuff was fascinating. And then of course there were a couple of those, more serious moments, but also were growth opportunities, if you will, from a career perspective in terms of being able to cover something that was kind of way outside my usual responsibilities.
Yeah, that's serendipitous moments. I mean, obviously me working at the White House under Clinton too as well. And, I think some of those cool moments that we sometimes don't always think of at the moment as very cool, that we look back and go, "Oh my goodness, I can't believe I did that."
Yeah.
Are there turning points in your life where you wish you had taken another turn, maybe something else that you wanted to do, or have you always wanted to be in the media?
Well, as I said, I started as a film major, and I'm actually, in the last 7 or 8 years, I've been acquiring IP rights to various properties that I, want to make films out of or television shows out of, way, way far away from the type of thing I do, with the exception of one film that's based on the book called The Great Salad Oil Swindle, which was a great Wall Street scandal in the 1960s, happened during the week that JFK was assassinated. And it's a fascinating story about a guy who tried to corner the world soy oil market and collapsed spectacularly and caused the stock market to really tumble in the 4 days prior to JFK getting shot. And Art Cashin was the person who told me that story. He famous, floor broker that we used on CNBC and FNN for quite a number of years. I don't know that I do anything differently. I think, I had a great run at FNN and CNBC. It was a real learning experience to start my own fun business. I've been traveled around the country and to a certain extent around the world talking to people about markets and economics. And I've met, more people that I could count who have been additive to my experience. So, look, should I have stayed at CNBC for the whole time and just kind of, done the same thing I'd been doing for 20 some years? Possibly, but I also would never have then been exposed to a lot of other things that have, I think, broadened my horizons over the course of the last, 15, 20 years.
Yeah, and I think a lot of people don't realize is that we're actually human beings, right? We put our pants on the same way. Do you have a morning routine, Ron, for when you get ready? What's that morning routine you have?
So I get up at 7:00 sharp, and by 7:30, I have to file 2 1-minute business reports for some radio stations that carry that. So it's 2 cups of coffee, 3 cups of coffee in the morning. Then I read for the next couple of hours until I have to file another report, and really kind of get dialed in as to what's happening. On a deeper basis with respect to markets, economics, geopolitics, which obviously are playing a rather large role in the news today. And I do that as much as possible. I get together with people to talk about what's going on. I speak a lot around the country, so that includes travel and going to places to talk to different groups, industry groups, financial firms, and so on and so forth. A lot of my time is spent reading. Most of my time is spent reading during the day. And trying to absorb as much information as I possibly can so that I'll borrow a Steve Cohen word, the mosaic that I'm trying to put together on a daily basis becomes more and more complete. And I think that's the real challenge for all of us, is just maintaining the access to information and reaching out to people that, I know are reliable to get insights that I might not otherwise have.
Yeah, we've got a comment here, Ron, from a dear friend of mine, Steve Flanagan, who was just on the show earlier today, said you are a financial markets news pioneer. Do you feel like you're a pioneer in the news market, the finances?
At a certain age, and that becomes a strange word to contemplate, because that means you're closer to the end of your career than the beginning. But look, I mean, FNN started in 1981. Bill Griffith and Sue Herrera were among the first two people to do live television business news in TV history. I got there in 1984. I was a production assistant. I got laid off. I got hired back. I was a producer, and then ended up on air on a day that Bill and Sue called in sick after this massive layoff that FNN went through in the spring of 1985. And there was nobody else to do the updates. So I went on air. And, from there, by September of 85, I was a full-time anchor at age 24. So, yeah, I mean, I don't know if it's father, grandfather, or uncle of this process, but, I did have a hand in kind of building out what it is that people see on a regular basis today.
Yes, he was asking about FNN from the crow's nest at the American Stock Exchange. I think we'll realize that we had a stock exchange at the American Stock Exchange. Tell us about that first studio there.
So we had somebody planted there. The New York Stock Exchange in those days did not allow cameras on the floor. And if any reporter wanted to talk to somebody at the New York Stock Exchange, they had to catch them outside on their smoking breaks. And so the Amex did allow people to be in there. There was one guy, by the way, who was across the floor from our camera spot, who swore like a sailor so loudly that it would get on air on a very frequent basis. But that was one of the kind of early arrangements that we had, getting any market coverage. And then we inked a deal with the Chicago Board Options Exchange in the mid 80s. And Bill Griffith hosted a show every Monday morning called The Options Report at 10:30 Eastern time. And I went out to Chicago to visit a friend of mine that I'd known since elementary school, who was in med school at Northwestern. And I asked Bill if I could pop on the show Monday morning from the Chicago Board Options Exchange and take this options trading class, because I really didn't know a lot about it in the year that I'm about to disclose. So I show up there on Monday morning, October 19th, 1987. And rather than taking an options trading class and doing one hit, I do 12 hours a day from all 3 Chicago exchanges, interviewing Leo Melamed, the father of stock index futures, going on the floor of the CBOE on the day of the crash, and talk about, trial by fire, learning as my first live reporting experience how to do that in the midst of the biggest crash in percentage terms that the market's still ever seen. So, it was a pretty wild experience, and FNN was formative in that regard, because we really did whatever we wanted, whenever we wanted, however we wanted, with very little interference, because we were quite honestly making it up as we went along in terms of formatting and all of that. There was no template for it. We were building it as we went.
Build the template. So I would say that's a pioneer side of that thing.
Yeah.
And look, as we go through some of these quote unquote crashes and negative downturns and the booms and the busts, you've literally seen it all, Ron. I mean, you have seen the 187, which is the big one, and obviously in the .com era, which I also went through. Talk to me about some of those stressful times that you've seen on the air. One of those mentions you mentioned was during 9/11, but being on the air a long time, the stress that you felt as an anchor, the stress you feel from those traders, I'm sure they're running around that have lost millions and billions of dollars.
Out of business, yeah.
Yeah, and out of business. Talk to us a little bit about that times.
Well, it's interesting, and it forces you, and this was true in 9/11 as well, from a different perspective. It forces you to choose your words very carefully, and to stay within a certain set of, I think, both intellectual and emotional parameters when chaos is taking place. When the market's down 23% in a day, and you're looking for the right adjectives, and while it's happening and you're live, and the thing is going on before the day comes to a close, you're also trying not to inflame the situation, no matter how bad it is. You don't want to be throwing gasoline on a fire. So you're searching for the right words. You're searching for the right sources. You're searching for people who have, an independent point of view, but also a good grasp on what's taking place. And I think that happened during the '87 crash, because there were people, by the way, who were absolute bomb throwers, who were talking about the market crashing beyond what we saw that week and going down to 1932 levels and things like that. And, you were working through all those things in real time. And the same with 9/11. And I'll tell you, I got thrown on the air at NBC when the Today Show was going on, because I'd come back from having been at, ground zero. And Andy Lack, who was the president of NBC News at the time, saw me and put me on with Matt and Katie and Tom Brokaw. And they're cool. Their aplomb during that period, Tom's in particular, I have to say, kept everybody within themselves so that you could report on what you saw. You chose your adjectives well. You tried to stay as, and I don't mean emotionless, but as unemotional as you could be in reporting what you knew and what you saw, without opining, without, stretching anything that had transpired, which was hard to do on 9/11. But I think the interesting change that's taking place in those days, and through all those experiences that I had, whether they were geopolitical or market-based, it was tell us what you know now, not what you think. These days, the business has flipped a bit to tell us what you think, not what you know. And I think that's where the news media has some challenges, is that, opinion almost counts as much as fact. And I don't believe that to be true for a second.
Yeah, and one of the things that you see over time is the different types of traders, right? In our times, institutional was the only way you traded.
Yeah.
Today, retail is a mainstay in the trading. Talk us a little bit about the trader themselves, how they've evolved over the last 30, 40 years, as well as the technology that's changed over the last 30, 40 years.
Well, I mean, the technology has virtually eliminated the culture that resided on Wall Street for so long. I mean, not to mention the fact that 9/11 forced everybody to move uptown. So it's not that concentrated business where if you were to go down to Wall Street, you see nothing but traders, specialists, guys on the floor. Back in the day, and I guess back in the days, the 90s, you had sales traders who were working the NASDAQ. You had $2 brokers on the floor of the New York Stock Exchange, as well as specialists and others who, kind of went up the ladder, if you will, in terms of their, responsibility set in the marketplace. And by and large, that's gone today. But the culture itself was fascinating, and having ready access to all those people where, on days that I would spend on the floor of the exchange, during big market moves, whether it was 97 or 98, everybody on the floor was extraordinarily helpful. I mean, guys would slip me notes while I was talking in the middle of a show and telling me which stock was about to dump, or that something was for sale or something was to buy. And you had these great interactions with people who were actually originally very skeptical of having us around, and then became very helpful. And it became very much a two-way street where information got shared among us and then with the public, which I think, is a little bit different than it is today. There's a little more phone work that you have to do than in those days, where you could, go down to the floor, talk to people like Art Cashin or Peter Henderson or other guys, who were making markets in IBM or what have you. So it's a radically different environment now. I miss those, as look, I mean, as you get older, there's a lot of things you miss. I kind of miss those days, because the culture that was involved in the trading environment was almost as important as the activity itself. And that's a little different. So technology has, as and as you experienced, is almost fully electronic. There's very little, face-to-face interactivity. And so it's changed. And a lot of things have changed. I mean, sub-penny trading, that's led to, market makers of market makers. That's led to a lot of activity that, is kind of sub rosa. Nobody gets to see it. And so there's just a whole different vibe to it today. And it's a much bigger business than it was when we were in it in the 90s. I mean, it's, now it's a $64 trillion market. It's 2.25 times the size of the economy. Retail is very, very involved. The dollar volume of options trading exceeds equities. So there's a lot going on that, everybody's kind of in the game right now. And then you have the proliferation of, kind of new players like Robinhood and eToro and others that are challenging other institutions, yourself as well, in the way in which, trading gets done.
Yeah. And, as new traders come in, I mean, I was given graph paper and pen, said, good luck. Let's learn how to chart.
Yeah.
When there weren't computers, right? And FNN was the show on TV. There was no CNBC at the time. But how the new traders today coming in, it seems to be that they're more excited about trading than it was when I was a kid. I want to be a firefighter and astronaut. Those kids did, and I want to be a stockbroker. That word term isn't even around anymore.
No.
What do you tell those new traders, those new kids coming in? What books to read? How to get started? What, obviously to watch people like yourself, but how do you get them started in a way that's more professional than the way that this willy-nilly Reddit and let's go on Twitter and see what the next hot stock tweet is, and getting them going in the right direction as opposed to the wrong direction?
Well, there is this kind of, digitization, gamification, and tokenization that's all going to take place or is taking place that makes trading for young people much more like betting, right? And so there is that dopamine hit that comes with it, and it always has, quite frankly, to it. But in the past, to a more select group of people, now it's available to almost everyone. I mean, it's hard for me to tell people to do it the way I did it, but I would recommend the way I learned about the markets, in addition to talking to people on a regular basis who have, extraordinary amounts of experience. Understanding Wall Street's a great book. The Psychology of Money is a great book. The Worldly Philosophers, which explains economics going back to Adam Smith in a very digestible, historical way, is a great book. I mean, all the books about events that took place, particularly during the 80s and 90s, like Barbarians at the Gate, and all of Michael Lewis's stuff. I recommend people read that to get a flavor of what markets are like. The trading part is a little different because, again, that was largely a professional affair when I was coming up. And now it's individual investors, traders, and speculators, make up a good chunk of what's going on. You have to try to teach people how to contain their emotions, that it's not a game, that it's not gambling, that a long-term mindset is better than a short-term mindset, unless you are built to be a trader, right? I mean, there's some people who just have a natural instinct. I've seen Steve Cohen trade, right? So, and I've seen other people do it at the highest levels, that are known on Wall Street. You have to have nerves of steel. You have to have ice in your veins. You'd have to be Michael Jordan, Tiger Woods, pick a name if you're going to get into that part of the business. And you also need to understand trends. You need to understand a whole host of factors that go into daily and intraday market moves. And that requires, I think, more pure experience than anything a book can teach.
Yeah, and that brings me to the point. I mean, Steve Cohen, those ice veins that he has, what separates him apart? What makes him Steve Cohen? You worked for Steve, you know him. Talk to us a little bit about that relationship and that ability that he has, and how it pretend to being who Steve Cohen is, and that strong talk with the Mets, obviously, right? And in sports too, as well, right?
So slightly different outcome there at the moment, anyway. Look, it's if you've ever, and I didn't spend a lot of time there, but I did spend some days on the desk, and you just see somebody who's so dialed in. And look, when I was there, and it's an even larger operation now, there were 1,000 people who worked there. There were 125 portfolio managers, along with their analyst teams, who gave Steve ideas to supersize. He himself was a very active trader. And, you've seen this a lot. I mean, I've been in Julian Robertson's office. I've talked to George Soros. I know a lot of these guys, or knew a lot of these guys at the peaks of their careers. And they each have their own special sauce, Stanley Druckenmiller and folks like that. Steve, was a very, very, very active trader all day long. He was not a position guy, although they did take, longer term positions in specific securities, but they were also very good at scalping, at finding inefficiencies in the marketplace. And I think he started trading when he was 13. And did it all through college. And there are just people who have this natural affinity for it. He's just stone cold when he's on the desk. I mean, he can just get it done. You're familiar with this term, but, at the end of the day, places like Steve's, will VWAP for the last 20 minutes of the day and take advantage of price discrepancies between the individual components of the S&P 500 and the index itself. And, you can make a 0.5% at the end of the day, and if you're trading 250, 260 days a year, that makes a big difference. You can have your down days too. But I mean, it's just, I think they're so dialed in. They so understand market structure. They so understand inefficiencies and price discrepancies. And they don't think twice about making decisions. They're very good at snap judgments, and they see the picture. It's I remember Steve saying once, he goes, as he was getting older, he goes, yeah, it's a little harder to see the high tight fastball, but he was still seeing the high tight fastball.
And when you look at those kind of traders, are they mostly looking at charts, or are they looking at the news? Are they looking what are they really concentrating on?
Everything. There is no bit of information that's too small, right? I mean, no insight is too small if it can change perception or if it's going to have an impact somewhere, right? I mean, and I've seen this with great CEOs, and I've seen it with great investors, and I've seen it with great traders. I mean, I've sat down with Warren Buffett, and after our interview was done, he was asking me questions about what's going on in the world, right? Jack Welch, same thing. We call up, what are you seeing? Bob Wright, who ran NBC, would say, hey, listen, we just saw, this was in October of 2020. He called me up after I'd interviewed George Bush, who was a month away from, being elected president, or getting the election done anyway. And he said, look, we're seeing a huge drop off in advertising. What are you hearing from your guys? We don't know if this is a short-term thing or this is a long-term thing. And with all the hedge fund guys that I used to talk to, we would exchange points of view. And I think that level of insatiable curiosity, where no piece of information is too small to know, was true across, again, like I say, CEOs, all kinds of business people, people like Bill Clinton, politicians, and others who really needed information. Bob Rubin was another one who was like that. I think when you talk to those people, that level of insatiable curiosity is what separates them from everybody else.
I agree. Data, right?
Yep.
As I'm going through life and I'm being interviewed as well, I'm always asked, what's the main thing? And for me, it's having a mentor. So talk to me a little bit. I mean, you've really been at the forefront of U.S. history, the forefront, and especially the anchor of our businesses. Do you have a mentor, and who are they?
Yeah, I mean, and it's funny because the individual I'll name is not someone who was widely known, but his brother was. Michael Crichton's younger brother, Doug, was our senior producer at Financial News Network when I joined. And I will say straight up, the single most brilliant individual I've ever encountered. He would edit Michael's books, quite frankly, and send bibliographies back so that Michael could read more about a particular topic. And that was true in one instance with respect to the book Timeline that Michael wrote about Middle Ages and about the multiverse. And Doug was unique in the sense that he was extremely patient, but also recognized like who would take the advice and who wouldn't, who would read the stuff he suggested and who wouldn't. And so I did all the time. And I would go back and ask him questions. And he had an extraordinary take on the world, read a lot of stuff in its original language. And he was, I think, my most influential mentor. But among others who were more notable, I would say I learned an extraordinary amount from Jack Welch. I learned a lot from Bob Rubin. I learned a lot from Julian Robertson in terms of again, and even Steve to an extent, this and Warren Buffett, this desire to know. Doug used to describe it as rats in your belly, that you couldn't be a good journalist unless you had that gnawing feeling inside of you that you were not satisfied until you had the answer to a question that you were trying to obtain. And I think that was critical in my development. Doug also happened to be a bit of an empath, which was an unusual experience to encounter, and had a great beat on people and could tell you things before they happened in a weird way. And so that left an indelible mark on me. Sadly, he passed some time back within 18 months of Michael passing. And they were both really interesting guys and left a indelible mark on the way on how I think about things.
Wow. And I just had a big shout out from Tuttle Capital Management. Matthew Tuttle says hello.
Oh yeah.
Yeah, says hello. So I want to make sure I got that on the air. You've also been the forefront of those kind of firms, right? prop shops and trading firms. And is there a firm that you just throughout history that you really admired? And you look back, you could say Shearson Lehman. We talked about that last night. All the different firms that have come and gone, big names. Anything that you were like, wow, I wish I was a part of that firm or that team that I didn't get to be a part of?
I think the evolution, well, there are two places probably. I mean, one would be Tiger Management with Julian Robertson, who created a culture among his managers that was a shared culture that allowed for a lot of collaboration versus competition among the PMs that he had. But I would say, as from an institutional perspective, I've been really fascinated by the evolution of Morgan Stanley through the acquisitions that it's made, Smith Barney, rolling all of that in and becoming kind of the premier wealth management firm. And it's not a commercial for them. I don't have any ties to them, but I did work with them on some, educational stuff over the course of my public speaking engagements. And I found that they had a real desire to teach and to bring people up and to engage in wealth management in a superior fashion. And so I think that's really interesting among the majors. Particularly with Gorman running it in such a way and really recasting the entire business. I thought it was fascinating the way they managed to build that out and really take ownership of the wealth management space in ways that others haven't. Now, there are a lot of guys I like too. I mean, Head of Truist is a great guy, and they're building out a great business. Other firms maybe less so, that I don't think have the same type of culture or support system around their employees. I'm not going to name them, but I do think the ones that I've mentioned kind of stand out. And look, honestly, when Jack Welch and look, people have changed their view to a certain extent about GE and the period in which Welch ran it. I thought it was fascinating. Jack was an absolute riot. I mean, in terms of his ability to challenge his employees, his willingness to interact with anybody in the firm. It didn't matter where you sat. If something happened and you wanted to reach out to Jack, you could. And we had a great relationship over time. And if he had a question, he'd call me up. If we had a disagreement, we'd make a bet on it. I have a $5 bill signed by Jack Welch after I won an interest rate bet with him that he was extraordinarily upset about having to do, from what his assistant told me. But it was a great experience, and the guy was great.
Welch, the billionaire, worried about $5. I love it.
Well, it was more losing the bet. It wasn't the money.
Of course, yeah.
And I made him sign it and admit that he was wrong, which I think that was probably the part that was.
Hopefully, you've got it like on your wall somewhere.
At my desk. Yeah, absolutely.
I love it. I love it. All right. So we talked about the past quite a bit, Ron. Let's talk about the future a little bit more. The future of media within finance has really changed over the last, I'd say even last 5-10 years, but even now faster, more and faster, probably ever before. And the way that we absorb that media, what do you see, not what we have today, but in the future? What do you see the future of media going to in finance?
Well, I think it's going to be probably less linear because we have to compete with other sources of information that, having come from a linear background, cable television, and now seeing the emergence of social media and things like, Wall Street Bets on Reddit and other, social media influencers that talk about finance, probably in some cases in ways they shouldn't. Not everybody is equal in that regard or offers, kind of the best insights that you can get. I think what's incumbent upon anybody who's in the business now, even more so than when I was coming up, when we had to, if you had to dispel a rumor back in the day, it was, some phone calls. Now, the rumors that get spread on social media, the commentary that goes on can be of vastly differing quality. I think it's incumbent upon anybody who's in the media, whether they're doing it in a linear fashion or whether they're picking their spots, to either do shows or interact with their audience. It's really now a much heavier lift to ensure that you're fact-based and data-driven. And I think that's the real challenge, no matter what format you choose to operate in. It's having high-quality people, high-quality insights. And it really doesn't matter to a certain extent how that's delivered, but I think it's going to be delivered as we move forward across multiple platforms in real time. And so whether you have a linear operation, you're also going to have a social media operation. We see this across, platforms now, but it's going to get bigger and deeper and broader over time. And so I think it's a little harder for the consumer to separate the wheat from the chaff. And I think that's the job that falls to folks, like me or others to say, okay, look, this is real stuff. And what you might be seeing over here is a head fake, or it might be somebody trying to manipulate you. It might be somebody disguised as a retail individual who's actually a professional and trying to, get an idea out there. That's the challenge. I mean, there are so many platforms now. How you deliver the information, I think, is less important than the information you deliver.
And Fortune Magazine just made a post not too long ago that just going to college is no longer just the path to a white collar job anymore. What's the path? Your path was very interesting to becoming an anchor. In your background, you are highly educated. Is that necessary anymore to be an anchor or to be on media now?
Well, it depends really who you work for.
Okay.
I think I see some people who are not terribly well educated, who put out a lot of bad information and have a large following. And I think that's a danger. Look, putting my kids through college, is an investment that my wife and I were willing to make. I do think it's worthwhile. I do think it proves something for the individual who's willing to undertake, being rigorous for 4 years before entering the labor force. It's not necessary in every job, most certainly. And listen, we have 500,000 open factory jobs that people are unwilling to take, and yet they pay well, and they require a different set of vocational skills. I don't think college is for everybody, but I do think that for those people who can make it worth their while and get the return on investment that they need, which in our business, quite frankly, is probably necessary. I still think, picking the right school, whether it's inexpensive or expensive, is a critical choice. And I think it's important that, as you enter the workforce, particularly one that's changing as quickly as this one is, that you have the right set of soft and hard skills to navigate the future, which is going to change, I think, faster than any of us ever experienced.
Yeah, let me ask that question. I'll let you go because I know you got a lot going on today. But in building that repertoire of you have, and the number of people you've interviewed, and the number of people in the business, is there a bias in the business politically? Is there a bias in the business towards other people, or are you guys all pretty much right down the middle of the road?
No, I don't. Not anymore. I mean, I think clearly. Everything is hyper polarized and become increasingly partisan, which is, again, relative to my past, somewhat unusual. You did have people who, staked out positions on one side or the other, but they were siloed. I mean, Rush Limbaugh had his show, right? And it was the right-wing radio show, if you will. And there were a couple of imitators, and that became, kind of morphed into the Fox approach to news. And then the reaction to that was MSNBC swinging left. And so now you have a much more polarized electorate, you have a much more polarized media landscape, and you have a much more polarized political landscape. And I think, for me, if I were to do something again in the space, I would love to eliminate that polarization entirely. And again, focus on facts, be data driven, and deliver insights that are valuable to people, as opposed to, talking one's political book, which really doesn't do anybody any good. All it does now is ruin Thanksgiving dinners. That's kind of where
I have one rule of Thanksgiving dinner: bring alcohol, right?
Yeah.
Right. Look, Ron, it's been an absolute pleasure, and I really appreciate your time here. And we look forward. And I guess I have one more question for you. Will you come back and join us for some more time like this?
Anytime, anywhere. Of course.
I love it. Ladies and gentlemen, Ron Insana, former CNBC Now. Listen, it's very simple. I'm going to put the link up to his website, roninsana.com.
I'm better off on either Twitter, Instagram. I have a Substack called The Message of the Markets, which is where most of my work is focused these days. That roninsana.com, that's an old one.
And we'll put it right up here, Ron. We'll get you the link right now to everybody so you can see his Twitter handle too is @rinsana. You can check him out. And I'm gonna tell you, the last post I thought was really good about the Monroe Doctrine. I think that history understanding is exactly what we need to understand when people make willy-nilly comments about things like that. So Ron, I appreciate your time today, and we'll see you right back here next time, man.
Yeah, sounds good. Thanks.